Hey everyone! Today I'm diving into the new lease accounting standards, ASC 842 and IFRS 16. These changes are a big deal for anyone involved in financial reporting. So, what's the big change? Both ASC 842 and IFRS 16 now require companies to recognize lease assets and liabilities on the balance sheet for almost all leases, except short-term ones. This means no more off-balance sheet operating leases, which used to hide a company's true financial obligations. For lessees, here's what you need to know. First, you'll now have to recognize a right-of-use asset and a lease liability for most leases. The lease liability is the present value of lease payments, while the ROU asset is based on that liability, adjusted for any prepaid lease payments or initial direct costs. Second, leases are classified as either finance leases or operating leases. Finance leases impact the income statement with separate interest and amortization expenses, leading to a front-loaded expense pattern. Operating leases, on the other hand, show a single lease cost on a straight-line basis over the lease term. Now, for lessors, things are mostly the same as before. They still classify leases as operating, direct financing, or sales type, with the classification affecting revenue and expense recognition. Operating leases earn income on a straight-line basis and the asset stays on the balance sheet. For direct financing and sales-type leases, the asset is derecognized and income is recognized using the effective interest method. Implementing these standards isn't a walk in the park. It involves reviewing and updating lease agreements and accounting policies, implementing or upgrading lease accounting software, and training staff on the new processes. Collecting and consolidating lease data, determining lease terms and discount rates, and managing lease modifications and subleases are also significant challenges. The goal? Enhance transparency and comparability in financial reporting. But getting there requires substantial effort, especially for companies with many leases. So there you have it, the new lease accounting rules in a nutshell. Make sure your organization is prepared to navigate these changes and stay compliant. Until next time, keep those numbers in check.